Hey, what's up, everyone? Jorge Gonzalez with Coldwell Banker Denver Central. Now, before I get to the main purpose of this video, which I want to talk about inflation and real estate for a little bit, happy Cinco de Mayo, everyone. Maybe some of you will enjoy the delights of tacos and margaritas at some point in time this day, and if you do, I hope you enjoy them. But moving on, let's talk about real estate a bit and inflation. Obviously, there has been a lot of uncertainty this year due to tariffs, and we've been in this in this real estate cycle the past couple of years, really 2-3 years going on now, where it's like there's been a lot of conversations about interest rates and affordability and inflation, and now tariffs, and how is that going to affect inflation? And clearly we have all seen reactions from Wall Street, huge dives. Yeah, there have been some quote unquote good days, but in general, uncertainty seems to be the word that is dominating people's feelings, corporations' feelings, and there are some economic statistics out there that support these kind of things. For example, the U.S. economy contracted 0.3% in the first quarter of 2025. And, the recession word is being thrown around. Now, some people's definition, and I tend to agree with this thought process, is 2 consecutive quarters of contracting GDP in the eyes of a decent amount of economists can be called a recession. I have no reason to refute that. Now, what do you call it? If you go back to March of 2022, the inflation percentage at that point in time was 5.3% in the United States. As of March of 2025, that number is at 2.6%. So, that's been cut in over half. But obviously, inflation started up, a little shortly after COVID. Now, back then, money was a lot cheaper. You go back to 2021 at one point in time, and the average interest rate was sub 3%, versus our reality these days is more like 6.5 to 7%, somewhere in that range. I think more recently we've been probably 6.8, 6.9%. Obviously those numbers fluctuate daily, but in general, we've been in this higher 6% range for a while, and even when it dipped into the low 6s interest rates, which we had a short period of time late last year, and that drew out some buyers, actually, some more buyer activity. But even during these times, let me read a couple of statistics to you. I'm going to start with some national real estate statistics that come from the Case-Shiller Home Price Index year over year, and that is based on, I believe, April of 2024 to April of 2025. The year-over-year home price index rose 3.9%. So 3.9% appreciation for houses across this country. Now, they're more urban index, the 20 city Case-Shiller Index, which is, big metropolitan areas around the country. It's measuring more urban markets. Denver is one of the 20 cities measured in that index. That year-over-year statistic was 4.5%. So, home prices are still going up, besides things like inflation and interest rates and affordability, all being conversations we've all heard for the past couple of years. So it's still going up. Now, I'll give you a couple of examples here in a little bit with some different Denver neighborhoods, ranging from very high-end neighborhoods to more affordable neighborhoods, to kind of illustrate a point that real estate might be the greatest hedge against inflation for those who have the opportunity to acquire it. And that can be difficult, especially in a higher interest rate environment. One motto I've always had, I've been in real estate for over 20 years now, got my license in July of 2004. And there's a couple of phrases that I'm a big fan of. Number one, don't wait to buy real estate. Buy real estate and then wait. Number two, marry the house and date the rate. So, what do you call it? If rates are high right now, and they are, and we've seen inventory levels rise over the past couple of years. In 2021, we were measuring inventory in days, not even weeks or months. Right now, we're measuring it in months. In some rare instances, and downtown Denver, ironically enough, is one of those, there was over a year of inventory in downtown Denver right now. But most neighborhoods are measuring it in months, a couple of months, 2 months, 3 months, 4 months, whatever. But a few years ago, it was being measured in days, and that was the time when someone would put a beautiful house on the market, and then it would receive 20 offers in 4 days, and the price would get escalated 10% or 15% or 20% above asking price, with concessions like no inspections and things of that nature, which is pretty crazy. But going back to a few more statistics, a report, there was this phrase that was mentioned when those national Case-Shiller Index statistics were released, that says home prices have shown notable resilience, even with factors like high interest rates and affordability, AKA real estate is a powerful wealth building tool. Keep that in mind. Now, I want to talk about a couple of neighborhoods here and around Denver, Metro Denver. First one, Green Valley Ranch. It's a neighborhood that's been built up over the past 25 years. A lot of homes built by national home builder Oakwood Homes out there. So you have a lot of homes. It's off of Pena Boulevard, close to the airport. Definitely one of more Denver's affordable neighborhoods. Let's see some statistics. The average price of a home in that neighborhood as of March of 2025 was $480,000. Now, this is in Metro Denver, where the average price of condos and townhomes exceeds $500,000, and the average price of single-family homes in general exceeds $750,000. So the fact that the average price is under $500,000 is, that is something. Affordable for Denver standards. Now, to put that into perspective, in March of 2020, the average price was $371,000. So from March of 2020 to March of 2025, you go from $371 to $480. That's an increase of 29.4%. Now, if you go back 10 years, March of 2015, the average price back then was $250,000. Now it's $480. That's an increase of 95.9%. Let's say you were one of those people who bought a house in Green Valley Ranch in 2015. You've pretty much doubled your money. Not too bad. Obviously, the last 5 years, that's when we've seen more inflation. And sales have been up and down. For the month of March 2020, there were 45 transactions in this neighborhood. In 2023, in March, there were 24. So March of 2020, that's when, the world got shut down. There were, orders to stay at home, and, we all remember March, April, May 2020, the social distancing, stay at home, only go out for necessities like groceries every once in a while, wear a mask, all that stuff. But there were 45 transactions in March of 2020. There were 24 in March of 2023, And in 2025, there were 31. So sales volume has been up and down, but the prices, they're up. Now there have been times where there was drops in prices over the course of a year or 2 years or 3 years, if you measure month over month or year over year in some instances. But over the long haul, you don't wait to buy real estate. You buy real estate and then you wait. That's how you create wealth. Let's move on. The Central Park neighborhood of Denver, formerly known as Stapleton. This is a little bit of a nicer neighborhood in Denver, but in March of 2020, the average price of a house was $584,500. It's $725,000 as of March of 2025. That's an increase of 24%. Now, ironically enough, in March of 2023, the average price was $739,000. So it went from $739,000 to $725,000 in the last year. Small drop. What is that? 1%, 2%. But over the long haul, average price is up 24% compared to 5 years ago. If you look at the 10-year average, the average price is up 93.33%. So, this is a nicer neighborhood, a little more affluent compared to Green Valley Ranch. But nonetheless, whether you are in the ritziest neighborhood or, a more medium class neighborhood, like real estate does well with time. It really does. Yeah, you'll have these little undulations, but not as much as Wall Street will have during these times of uncertainty when things like consumer confidence is dropping, and rightfully so. You go to the high-end neighborhoods, two in Denver, the Highlands and Wash Park. People in Denver love these neighborhoods. They are great. Over time, they will probably do a little better in the long term than more affordable neighborhoods, but not always. And these have been some of Denver's most established neighborhoods for 20, 30, 40 years, etc. The Highlands. In March of 2020, the average price was $615,000. Right now it's $804,250. That is a 30.8% increase compared to 5 years ago. Now, coincidentally, in March of 2023, the average price was $882,950. And March of this year, $804,250. So that's a drop, actually 8.9% drop if you want to be exact. So it's like there are some opportunities out there. Wash Park in general, it's just been up. 5 years ago, average price of a house there was $756,000. Now it's $1,255,000. Now, for those of you who know Denver and Wash Park, you have the east side of the park and the west side of the park. The east side of the park is the more luxurious side, but even the west side of the park, it's pretty nice. This average price reflects both. The average price, if you just look at the west side of the park, the average price is a shade over $1 million versus the east side of the park just on its own is probably a shade over $1.6 million. So, not a cheap neighborhood. There are some properties you can buy there for under $1 million. You're not going to find too much, but then you'll find other homes above $2 million, $3 million. Hell, every once in a while, you'll even see a select few homes sell for over $5 million in this neighborhood. There is a lot of beautiful real estate in this neighborhood. The average price in the last 5 years has increased by 66%. If you look at the 10-year average, it's gone up 93.9%. So the 5-year average is more heavy compared to the 10-year average. So every neighborhood is different. But the point is, get out there. I heard a statistic the other day that in 2024, almost 45% of the transactions in this country had seller concessions. Seller concessions that buyers can use to pay closing costs, buy down your interest rate, whether it's temporarily or permanent. There's plenty of scenarios out there, and there is inventory, so you can negotiate on price. You can get, maybe some concession, come in at asking price and get 2 or 3 or 4% in concessions and use for some of those things. Or you can just negotiate straight off of list price and get a 2% discount, a 3% discount, a 4% discount, a 5% discount in some instances, even out there. There are some scenarios right now. There is more buyer activity compared to last year, where there are some homes that are going for at asking or maybe even slightly above asking, because they're priced conservatively and they're beautiful homes and they don't need anything. But in general, there's a lot of opportunity out there. And I'm assuming because of all this uncertainty and tariffs and inflation, that this story's not going to change overnight. It's going to take time for this story to change. Who knows how long that is? Maybe it's 12 months, maybe it's 18, maybe it's 24. Who knows? But at some point in time, it will change, and then the market will change, inventory will shrink, and then we might start seeing markets where our prices are appreciating more than 3 or 4% a year, because I know the 50-year historical average for the United States is closer to 7% than it is 4%. So anyway, hope you find this information informative. If you have any questions, don't hesitate to ask. Thanks. Bye.